Hello traders, today is Thursday, 11th of July. My name is Andrew Burke and you are watching Libertex Show Pro Market Review. For the next 15 minutes we will check what's going on our markets as we had Jerome Powell, the chief of Federal Reserve System, yesterday testified in front of House Financial Committee. So he gave market some hints about future rate cuts, okay, and let's see how this event, because this was the major event yesterday and probably for the whole week, and let's check how it impact on our charts and what should we do with this, okay. Let's see the most important levels in currencies, commodities and stock indices. And of course, don't forget, if you have any questions, if you have any assets you want me to analyze for you, please feel free to put them in the comment section below this video. So I will start with US dollar index future, as we have this bounce from resistance level 97.20 cents. Okay, that's why I didn't recommend you to buy in front of this resistance, because we know that near resistance level there is more selling than buying. That's why the low probability trade is to buy in front of resistance. Of course you can buy sometime a little bit and add after the breakout, but in this case, after we moved from 95.50 cents, okay, to 97.20 cents, the move was a bit overbought. Okay, the oscillators were in the overbought zone, and that's why we had this bounce. Of course, combined with this news about possibility of future rate cuts. Investors expect that by the end of July we will see at least one rate cut for maybe 0.25%. Okay, the rate now is 2.25%. We will see. Anyway, what we have now, we have this bounce off from resistance. Okay, we lost this nice trend line, and again we lost 8 and 21 moving average. What it means for me, that we lost bullish momentum in US dollar, okay, active momentum where active traders were buying, okay, and keep buying. Of course we expected maybe we can go through this resistance level and accelerate to the top, but for now this is a dream, okay, because we can do this right now, at least for the next week or so. So guys, at this point I don't recommend you to trade to the upside. Even to the downside it's difficult, because seems like it's again a bit random. We are trading around this 8 and 21 moving average, and it means we are in a wide consolidation, and it's very difficult to gain some edge, okay, in trading this kind of asset, this kind of chart. So let's switch to other charts. Maybe there we can find something interesting. So the next asset, let's move on to Euro USD, as we had very interesting level of support. I was watching this level of support 1.12. here it is, 1.12. okay, near this point traders bought very aggressively, and we moved right to the 1.14 mark. And again we discussed this trade before in our previous videos. Please go and check them. And you see that this move was a bit oversold, and near the important support level it's very probable that we will go higher, okay, that we will bounce at least into this zone, of 8 and 21 moving average. So we bounced yesterday, very nice green candle, white candle, closed near highs, okay, and today we have this expected continuation, this follow through move, okay, into this 21 moving average zone, which is 1.12 and 700 pips, okay. So what should we do now? If you miss this candle, and even if you miss this candle, of course it's better to wait if we can see some commitment from buyers. So what I want to see is buyers building some nice foundation near top half of this move, okay. I will put this local support level, short-term support level near 1.12 500, okay, and see if buyers have enough power to hold this buying, okay, actually, if they can commit to this move. So it's not like 1 day magic, okay, or even 2 days magic, and maybe we can continue higher. But again, in general, if we zoom out a little bit, we can see that we are in this wide range with 1.14 resistance level and 1.12 support level. And how do we trade in range? We buy near the support level, we sell near the resistance level, and we avoid the middle, okay. This is very important rule. Please avoid the middle, because in the middle we have chances like 50-50. We don't know which way, who is winning, who is losing this battle, and we don't have any edge. And I don't want to put my money in low probability trades, in such a marginal probability trades, okay. So we are pretty close to the middle. 1.13 is our middle, so that's why I want to be a buyer near the support level around 1.12 500. Then we can have some more potential, at least to the 1.13 and higher. Of course, we can even test this resistance level one more time, and that's it. So that's it. Please, maybe we can wait 1 or 2 days, like 2 trading sessions, see if we can hold this 2-day move, okay, and then probably we can buy a little bit at about this high and see if we can roll over the roll higher, okay, to higher levels. Next level of resistance 1.13 400, okay. So let's move. Today I will check something different. I will check GBP versus JPY, not USD but JPY, Japanese yen, and I will tell you why in a second. Okay, this is 5-minute chart. Let me switch to 1-day chart. Okay, so today I decided actually to buy this thing. I never looked at it and never tried to reverse this very aggressive bearish trend, okay, very aggressive bearish trend, because we know that Great British Pound is very weak due to this Brexit uncertainty, and Japanese yen is strong as we have those worries that global economy is slowing down. And combine these two in a pair and you have a very trending down chart, okay. Actually, that's what we see here. We see that traders put pressure on it, but my attention was for this candle. I call this reversal candle, as traders try to push lower. They put just a little bit a new low. You can see new low here, but again buyers stepped in very aggressively and reversed this action. So yes, right before this video, I bought a little bit, small position with stop 135.0, and to see if we can move higher, if the buyers will continue their action and maybe sellers will cover their positions, okay? As we have this huge downtrend, they accumulated probably huge short positions, speculative positions, and we know that speculative positions are pretty weak. If something going wrong, they will cover their weak positions, and we will have this, they will add this fuel, okay, to the market. So this is how it looks like, the reversal move. We have downtrend, then very aggressive, you can see this angle, okay, and continuation again, and we engulfed this downward movement. Seems like we will see this reversal. So that's why I want to be a buyer here. I will add actually, but let me switch to my daily chart. I will add to my position, probably if we will move above this 136 level. Seems like a good reference point. Here it is. Buyers tried here but failed again. It acted like support previously, but now seems like it acts like resistance again. And let me see. I have this small position, and I will add respectively if it will move higher above, so we can see some higher levels. And I expect a really nice trade here, but we will check in future videos how actually it played out. Okay, so let's check what our gold is doing. Let's switch to commodities and see the reaction to Jerome Powell's testimony. Okay, so this is our gold. It acts really beautiful because we had this huge momentum to the upside. We broke out this major resistance level, $1,360. Okay, you can see that it's really important level because we had this buyers tested this level before and failed to move higher, but now seems like they broke out, and you can see this acceleration to the top, and now we are digesting this upward movement. Okay, we are digesting, we need some rest before another move higher, another leg higher. And I like how we do this. I like this consolidation because look how buyers showing commitment to this move. Okay, they don't let sellers to push prices lower below 21 moving average. Okay, it acts like dynamic support for us. You can see that even recently we have tested this 21 moving average around $1,385 mark. Okay, and sellers rejected, they failed to push lower. Okay, the buyers defended this level 1,380, and seems like we are at, the price edged higher, and we want this breakout to happen again. So we have this level. Price never closed above 1,423. Okay, so what I want to see close above this level where traders rejected those levels. You can see 1 and 2 candles, 2 tails failed to close. Okay, maybe this time we will close above, and it will attract attention of even more buyers, and we can move even higher. Okay, so I'm very positive about gold. The bias is to the upside, and I expect it to move even higher from here. Okay, I'm not sure that this is the right moment, okay, as we still in this consolidation moment. Maybe we need even more time, but anyway, we can use this upper level of support as our stop loss level, okay, and check if we can move even higher. Okay, so let's check what our crude is doing. Oh, okay, I will check you maybe Brent, as it's more common. About Brent, about oil in general, we have those tensions between US and Iran. Okay, that's why we see the speculative buying of oil here. Mm. Today we have this continuation candle. Now it trades about 200 moving average. Now it trades about this resistance level, $66 mark. Okay, so seems like we are positive here, but again, I try to avoid, because I don't like to trade those geopolitical news, and they are not very stable. The news flow changes very often and in the opposite direction. So I don't want to be caught up in the trap, because, as I said, those geopolitical news are not very stable. So anyway, we're still trying to edge higher from here, but from other side we have the slowing economy. Those worries that GDP, global GDP, will slow down, and that's what's keep pressure on our oil. Okay, because oil is one of the most important product in one of the most important resource in production. Okay, and if the economy is going down, demand is going lower, and of course demand for oil is going lower as well, so the prices. And we have the speculations, but as I said, I'm not sure this is very reliable signal, so I'll just avoid, and I recommend you to avoid, because don't want you to be trapped in this action. So let's check what S&P 500 is doing. I will analyze this SPY ETF, which is proxy for S&P 500. And yesterday we had those fresh highs, okay, historical highs, but again we failed to close near the top. It's still okay. We have this small doji candle. Maybe buyers are not pretty sure about future, but still the sentiment is very positive. You can see this 8 and 21 moving averages, they follow the price very nicely. That means that we have this active buying momentum. Don't try to reverse this action, as we don't have any signals of reversal or change in direction. Okay, the news flow is positive for investors, as you know, the support from central banks makes them happy about what is going on, makes them believe that they will save the economy from another crisis. So okay, we have this upper level of support. Okay, here it is. Okay, I will delete this one and just extend this line. Okay, we have this 294 level of support. You can see how it acted like our resistance level, but now it acts like support, and it's very common price action pattern. Please try to implement it into your trading strategy. It's very useful when resistance becomes support and vice versa. And yeah, so if you are a very active trader, please put this level, okay, the yesterday's low, which is what it is, let me check, it's 297.78 cents, okay, almost 298, so it's easy to remember. And we have this high, so let's see if this doji will lead to some reversal and some maybe digestion move, okay, to this 21 moving average, okay, or we can move even higher from here, okay. So put those levels in front of you, so when the price will confirm one of those scenarios, you can act respectively. So just plan your actions. That's why we have those videos. We try to prepare ourselves for future scenarios, so we won't be caught up in this emotional impulsive trading, okay. So basically that's it for today, guys. Hope this helps you to plan your trading session, and don't forget, prepare yourself very well, know your levels, know your time frame, and of course try to diversify between high probability trades, and when something goes negative, others can hedge you, and you make even more money because you follow this risk reward rules. So thanks for attention, Andrew Berg. See you next time on Monday. Bye bye, guys.